Who's the next one? Who's the next Solana, the next ETH of this cycle? That's where the real money gets made. Because those first cycle, you got nothing to compare it against. You can't say, oh, it's already up 5x versus its all-time high. You've got nothing, just blue sky charts. And that's why you tend to get these ridiculous first-time runs, like Solana last time. And I'm very interested in what that's going to be. Bitcoin's got the seal of approval. ETH will get the seal of approval at some point. What you've now created is capital inflows. Now, this is not direct investment because it doesn't go directly into crypto land. It's like a trade deal. That money gets recycled in the crypto economy and out the risk curve.
Renowned investor and cryptocurrency enthusiast Raoul provides his insights and predictions for the upcoming bull run, as the crypto community eagerly awaits the altcoin season that follows the Bitcoin halving, a time known for increased activity and significant price movements in the crypto space. Raoul explores the possible winners and ways to prepare for the changing cryptocurrency market in this exclusive conversation. Solana is one of his top recommendations. It has shown remarkable success in past cycles, suggesting excellent potential for the next growth. PAL, seeing beyond individual initiatives, recognizes two ecosystems that are about to take off: the vast Cosmos Celestia and the Creative Move protocol. PAL provides viewers with a thorough guide on taking advantage of possibilities in the upcoming cryptocurrency summer by sharing his most recent bull market methods and priceless insights. PAL has a great eye for developing patterns and market dynamics. Let's hear what Raoul has to say.
I've observed is things that are getting adoption that are earlier on the adoption curve outperform. So ETH killed it last cycle as a chain going from, it's been proven now, it's gone through its bad times, Lindy effect in play, okay, now it then exploded 47x from the low, right? And then established itself firmly as the second most dominant player in the space. If you remember last cycle, there was 3 breakouts, really? Well, 4. One was Luna, that went. 3 breakouts. One was Solana, one was Avalanche, and the other was probably Polygon. Now, who was the winner? Well, the one that got the most adoption ended up being Solana. It was the one that came from the bottom, down 97.5% from this cycle, like ETH was the previous cycle. It's gone into now accepted as an adopted ecosystem at scale. Who's the next one? Who's the next Solana, the next ETH of this cycle? That's where the real money gets made. Because those first cycle, you got nothing to compare it against. You can't say, oh, it's already up 5x versus its all-time high. You've got nothing, just blue sky charts. And that's why you tend to get these ridiculous first-time runs, like Solana last time. And I'm very interested in what that's going to be. I've got 2 or 3 ideas what it might be, but who the hell? I mean, I'm just not good at this yet. I'm good at the next bit, which is see what's getting adoption properly. And then that trade is relatively easy. This trade is more difficult to figure out what is it going to be. People shouldn't emulate me because I've got a lot of experience with risk taking and I'm comfortable with the risk that I'm taking. I don't use leverage. I use external custody, multi-sig, all of the things, and I'm very focused on my thesis, which is, you're dead right, it's the network thesis. So I then look at charts of assets relative to each other. So I was looking at the Bitcoin ETH chart, which I follow closely, which has been underperforming, and I think it's basing, as we talked about. But the chart to me that was a standout in 2022 was the Sol ETH chart. And that was the chart that got me buying Solana and then going all in. Much like I went into ETH all in about September 2020, right? I just did it earlier in Solana. And so I am 80% Sol. All of my ETH is now NFTs. I've been buying high-end art NFTs. I then have a bunch of the portfolio in the fund of hedge funds in Exponential Age Asset Management. And I have 1% in stupid shit like WIF and Doge and Bonk. Got all of those, but that's 1%. So even when I post about it on Twitter, I'm sure some guy some joker in 2026 is saying, you were recommending WIF. Just to be clear, I've got in all of meme coins and everything else, 1% of my portfolio. I am 90%, 80% Solana.
Let's review some recent news before delving further into Raoul Pal's knowledgeable analysis on cryptocurrency. An report on FX Street claims that the recent fluctuations in Bitcoin's price have caused market turbulence, with Ethereum and Ripple also witnessing decreases. Investors are fleeing to traditional safe haven goods like gold and silver as a result of these changes, which coincide with tensions between Iran and Israel in the Middle East. Consequently, the cryptocurrency market has seen a sell-off. Technical indicators pointing to a bearish outlook include the Awesome Oscillator, Moving Average Convergence Divergence, and Relative Strength Index. Potential downside objectives for Bitcoin include approximately $60,000. In a bullish scenario, Bitcoin may, nonetheless, retake important support levels and push for fresh highs above $69,000. Experts advise that governments and institutions continue to be cautious about Bitcoin and other cryptocurrencies, regardless of these brief swings caused by broader market conditions, even in light of their notable success. Let's return to Raoul Pal as he explains why many governments and institutions are still apprehensive about Bitcoin and cryptocurrencies, despite their undeniable achievements.
They're all terrified of DeFi. Authorities, put it that way. What do you mean you can have a bank without bankers? What do you mean you can have, you can have an exchange without people? To them, this is alien concept because it is really the antithesis of the existing system. So they've never been comfortable. And then they use the ridiculous KYC AML thing, which really all KYC AML is to increase tax takes. So everyone has to declare everything. That's really what that's about. It wasn't really about terrorism financing and stuff like that. It's really about they need to know where your money is at all times so you can't leave the system. Okay, fine. We live in their countries. They want those rules. It is what it is. But they just don't like this whole system yet. When you're in a monopolistic power situation, look at Google's inability. And I know the Google Web3 team well. They understand it.
Yes, they do.
They think it's great. But even the CTO of Google, as far as I'm aware, is a huge Web3 fan. But they can't do anything because it's going to disrupt their own business. The US is the incumbent monopoly of money, global money, and it's fearful of changing its system in case it loses control of the system. So this is why they've if you think about it on this kind of spectrum, Coinbase good, Binance bad.
Yeah.
Right? Because Coinbase is within the walls. They've blessed them with a monopoly, basically, and shut out Binance, which is the world's largest exchange, which is probably Chinese controlled, in as much as Coinbase is US controlled. And therein lies the separation, much like Chinese tech firms, US tech firms. This game is being played out literally everywhere we see. Even the ETF for them is quite funny because the ETF they think of is keeping the money within the system. Right, so it has to go through the intermediaries and the middlemen and all the checks and balances that they've got so they know where it goes. I actually think of it differently. I think it's a Trojan horse of crypto land put into fiat world, because what you do is you give people a taste of what this is and they will move out the risk curve. They always do. And they'll come into crypto land. So I think the SEC and the US government think that it's a victory to channel assets through the ETF. I think it's a victory for crypto land as a Trojan horse. Bitcoin's got the seal of approval. ETH will get the seal of approval at some point. What you've now created is capital inflows. Now, this is not direct investment because it doesn't go directly into crypto land. It's like a trade deal. That money gets recycled in the crypto economy and out the risk curve. Profits get recycled into VC. VC creates new products, which create the new opportunities for the next cycle. So I don't think it slows it down, because that still continues. Mum and pop in Ohio are not going to be using Uniswap to trade, some 100th token. So I don't think it really matters. Almost every other central bank in the world of certain size is working on CBDCs. The US won't, because it's terrified of making the move. And the US has a history of this, and I wrote some threads about this in the past. So after the US left the gold standard, right, everybody now needed to exchange currencies with each other. And the US was like, well, we don't really want to be involved in this, because they were worried about what was going to happen to the dollar. So the UK started the foreign exchange markets, and it became the biggest market the world has ever seen. And the UK dominated that market ever since. Second was the Second one was the offshore lending in dollars. So the US was really worried about dollar circulation outside of the US. Didn't know how to deal with it. Same thing with the reserve currency, we want to look this up. So they just basically restricted US bank lending to various entities. So the UK started the Eurodollar market, which is the offshore dollar market, and it siphoned through other global banks. It became the largest market the world has ever seen. The US missed all of those. So that's why LIBOR, the London Interbank Offered Rate, is the interest rate for the entire world, or was until they've just changed it to SOFR. Then it happened again in the very late 80s, where the derivative market in the US was basically the Chicago Mercantile Exchange and the Chicago Board of Trade. But then the swaps market was developed, and it was an OTC market, and it required bank regulatory capital. The US regulators, to protect their own exchanges, said, we're going to make it so hard for you to do that you're not able to. So the UK started the swaps market, which then became the whole OTC derivative market, which is based out of the UK, which became a $1.4 quadrillion market. So the US has a history of doing this in its fear of screwing up. I get it. You're the incumbent. You've got a fear factor. The UK has an innate ability to arbitrage that. So they see the opportunity. That's why the City of London is so big. The UK stock market's small. It's because they took all of the business from the US. And what was very interesting is they see the US fumbling the ball yet again with crypto. And the UK stood up and said, we want to regulate this properly. We want to bring it here to the city. And we want to turn this into a huge market. And they've done this. This would be the fourth time. And, you know, I remember speaking to the guys at Coinbase about this. I think it was Brett, who runs their institutional side. I'm like, he grew up like me in the traditional finance industry. Back in the 90s, all of the main offices of all of the US banks was London. Goldman's biggest office, London. JP Morgan's biggest office, London. Morgan Stanley's biggest office, London. All of them, because of this. And slowly, after Basel III regulations came in the early 2000s, capital went back to the US because the US didn't put such stringent things onto the balance sheets of the banks. So money flowed back. So it just feels that the opportunity here is this whole thing to happen all over again.
Raoul Pal clarifies the authorities' concern about decentralized finance, DeFi, highlighting how disruptive it is. Pal draws attention to how traditional institutions find it hard to believe that there might be a bank without bankers or an exchange without middlemen, concepts that are so different from the well-established structure they are used to. He believes that laws like Know Your Customer, KYC, and anti-money laundering, AML, which are mostly focused on raising tax revenues rather than preventing the funding of terrorists, are partially to blame for this reluctance. Pal emphasizes how monopolistic nations, such as the US, are reluctant to accept change because they worry about losing control over the world monetary system. He draws attention to the paradox that while big tech companies like Google recognize the promise of Web 3.0, they are hesitant to fully embrace it since it would threaten their current economic structures. Pal draws a line in the regulatory landscape between organizations that are considered acceptable, like Coinbase, which operates within legal bounds, and others that are seen as dangers, like Binance, which is excluded despite having a dominant worldwide market share. According to him, regulatory authorities' acceptance of Bitcoin exchange-traded funds, ETFs, is a cautious welcome meant to direct assets through regulated channels. Pal, on the other hand, believes that this is a Trojan horse for the cryptocurrency space, and that as investors pursue riskier ventures, funds will gradually move into decentralized finance, DeFi. Pal makes connections to past events in which the US failed to adjust to new financial patterns, allowing other countries, especially the UK, to profit from untapped markets. He highlights the UK's aggressive approach to crypto legislation as a sign of its potential to emerge as a major center for the developing sector, emulating its past capacity to take advantage of American anxiety. Pal suggests, in closing, that history may repeat itself in the cryptocurrency area, as the UK is once again well positioned to take control of a rapidly expanding market.